Hello everyone. Now today we will be taking up with the MCQ sessions of accountancy part B. In part B, question number 35 onwards, not 35, sorry, 27 onwards probably, you have part B of your board exams. Now in that you are asked 4 MCQ questions. Okay, 4 MCQ questions of 4 marks are asked in part B. 16 MCQs come from part A, that is volume 1 and 2 of T.S. Garewal, and 4 MCQs come from part B, that is volume 3. Volume 3 means analysis of financial statements. So 4 MCQs, 4 marks, analysis of financial statement based questions will be taking up today. And in this session we'll try to cover all the MCQs which are best possible from this chapter. So this one session, if you see, you'll be able to score those 4 marks completely. Okay, nothing beyond this can be generally asked. So let's take it up. First, part B, analysis of financial statements. When an analyst analyzes it should be the financial statements of an enterprise over a number of years, then the analysis is called. Now over a number of years means you analyze 1999, 2000, 2001, or you can say 2022, 23, 24, 25. So this way when you make the comparison, it is called horizontal analysis. Okay, it is called horizontal analysis. Dash will result in increase in liquid ratio without affecting the current ratio. Without affecting the current ratio means liquid ratio will increase but current ratio will remain same. Now let's see one by one. Sale of stock at cost price. See, if you sell the stock at cost price itself, okay, we are talking about the liquid ratio without affecting the current ratio. Now when you sell the stock at cost price, first of all, will the liquid ratio be changing? What is the formula of liquid ratio? Current assets minus inventories minus prepaid expenses upon current liabilities. These are liquid assets basically. Okay. Now when you sell the stock at cost price, what happens? Cash increases and inventory decreases. Cash will increase means current asset will increase, inventory will decrease. Further, if you subtract it, overall numerator will increase. So liquid ratio will also increase. So if you sell the stock at cost price, liquid ratio is definitely going to increase. Again, understand the reason why liquid ratio is going to increase. Cash will come in, so current asset will increase, or credit sales, then debtors will increase. And goods are going out at cost price, so inventories will decrease. Overall liquid assets will increase because current assets increase and inventories which you are subtracting further decrease. So overall there will be tremendous increase in liquid assets. Now if numerator increases, then liquid ratio is going to increase. Now they say without affecting the current ratio. Now because you are selling the goods at cost price, current ratio is current assets upon current liabilities. So what will happen? Because you are selling the goods at cost price, inventory will decrease, and cash or debtors will increase, means overall there will be no change in current assets. Overall there will be no change in current assets because one current asset, inventory, will decrease, another current asset, cash or debtor, will increase. So it is actually not going to affect the current ratio. So option A itself is the correct answer. No need to read the further options. Okay. Going further, question number 3. As on 31st March 2024, the following information of Bartan Manufacturing Limited is available. Net profit ratio is 40%, operating profit ratio is 50%. Now on 1st April 2024, it came to notice that the accountant had omitted the recording of interest received on investments of rupees 2 lakhs for the financial year 23 to 24. You did not record interest on investments. Okay. The required rectification was done. Now, if you record the interest on investments, profit is going to increase. What will be the effect of same on net profit and operating ratio? Now, understand this. What will be the effect on net profit and operating profit ratio? See, interest on investment is included in the net profits. In counting of net profits, we do consider interest on investments. So after you rectify it and interest on investments are recorded, the net profit is going to increase. So net profit ratio will definitely increase. In operating profit ratio, interest on investments are not taken only into consideration. Okay, in calculating operating profit ratio, interest on investments are not taken into consideration. Why they are not taken into consideration? Because interest on investment is a non-operating income. Even in cash flow statement, you all have studied, said investment activities income. So in calculating the operating profits, non-operating incomes and expenses are not taken into consideration. So whether you record it or not, it is going to have no effect on operating ratio. So what will be your correct option? Net profit ratio will increase, but it will have no effect on operating ratio. So net profit ratio will increase, but operating profit ratio will have no change. Option C is the correct answer. Okay. Going further, question number 4. While computing cash flow from operating activities, which of the following items will be added to the net profit? In operating activities, which of the following items are added? Let us see and analyze one by one. Decrease in value of inventories. We have studied that when we find cash flow from operating activities, then current assets have inverse relation and current liabilities have direct relation. Means if current assets will increase, then operating cash flows will decrease. If current assets will decrease, operating cash flows will increase. Having inverse relation, what will be the value? What will happen if there is decrease in the value of inventory? Cash flows will increase. Okay. So being inverse relation, will this be added? Yes. Increase in share capital will affect financing activity. It will have no effect on operating activities. Increase in the value of trade receivables. Now, increase in trade receivables means inverse relation, cash flow will decrease. But we are asked what is going to be added. So this is not going to be added for sure. Increase in the amount of outstanding expense. Now, outstanding expense is a current liability and current liability has direct relation. So if current liability will increase, cash flow will also increase. That means this will also be added. Okay. Sorry. So which of the following items will be added? 1 as well as 4. Option D. 1 and 4 both are going to be added. Going further, question number 5. Which of the following statements is correct? Let us read one by one each of them and identify which one is correct. Okay. First, investments in shares are excluded from cash equivalents unless they are in substance cash equivalents. Now, when we invest the money in shares, are they excluded from cash equivalents? Yes. Unless, when are they in substance cash equivalents? When you make these investments for very short period of time. Means very short period of time means they are included in current investments. So if they are included in current investments, then only they are part of cash equivalents. Otherwise, they are excluded from cash equivalents. So this statement is definitely correct. Let us see the other statements in brief and rule out the possibility that others might be correct. Okay, means let us prove that the others are incorrect. Short-term marketable securities which can be readily converted into cash are not treated as cash equivalents. Wrong. Short-term marketable securities, current investments are treated as cash equivalents. In case of a financial enterprise, interest received and dividend received are classified as investing activities. No. Okay. In case of a financial enterprise, these are classified as operating activities. They are the main incomes of the financial enterprise. while dividend paid and interest paid on debentures are operating. No, dividend paid and interest paid are always financing, whether for a financial enterprise or for a non-financial enterprise. So this is also wrong. This is also wrong. Let's rule out the D option also. Provision for tax made during the year should be classified as an outflow from operating activity. No, we take it in profit before tax and extraordinary items. Okay, we calculated it finding profit before tax and extraordinary items. Only option A is correct. Going with question number 6. Statement. Statement 1 is there and statement 2. Two statements are given to you, and based on that we have to identify which one are true and false. Let's read both the statements and there itself identify is it true or false. Shri Limited was carrying on a business of packaging in Delhi and earned good profits in the past years. The company wanted to expand its business and required additional funds. To meet its requirements, the company issued equity shares of rupees 30 lakhs and it also purchased a computerized machine of rupees 20 lakhs. During the year, the net profit of the company was rupees 15 lakhs. Cash inflows from operating, investing and financing activities. You are asked cash inflows from operating, investing and financing. Let's identify them first. Issue of equity shares means, because it's a manufacturing company, issue of equity shares will be taken in financing activities inflow. Purchase of machine will be taken in investing activities outflow. And net profits of the company will be taken in operating activities inflow. So how will it affect operating activity? There will be an inflow of 15 lakhs. How will it affect investing activities? There will be an outflow of 20 lakhs. So this is also correct. And how will it affect financing activity? There will be an inflow of 30 lakhs. So this is also correct. Bracket means it is an outflow. So statement 1 is correct. Statement 1 is definitely correct. Okay. Now let's read statement 2 and identify it. The patents of X Limited increased from 3 lakhs in 21-22 to 3 lakh 50,000. Now patents are part of investments, investing activities. Patents come in intangible assets, but buying of patents come in investing activities. Writing of patent comes in operating activities. Okay. Here, since they are increasing, means it is purchase. So it will be investing activities outflow. It will be taken as purchase of payments of 50,000 and will be shown under cash outflow from investing activities. Yes, this is also true. Both the statements are true. So option A is the correct answer. Both the statements are true. Question number 7. Freedom to choose of method of depreciation. Choose the method of depreciation. You have the freedom. You can go by straight line method of depreciation or even reducing balance of method of depreciation. That is written down value. Refers to which limitation? Now this is a limitation, because if you want to increase or decrease your profits, then you may be a little bit biased and accordingly you may take straight line method or reducing balance method as per your objective to increase or decrease the profits into consideration. You can play with this limitation of accounting statement. So what is the main answer? It is not free from the bias. Okay, there's a limitation. 8th, dash is included in current assets while preparing the balance sheet. Okay, while preparing the balance sheet as per revised schedule 3, but excluded from current assets while calculating current ratio. So in balance sheet we include in current assets, but in calculating the current ratio we exclude it. Okay, only one such item is there of inventories, loose tools and spare parts. In balance sheet it is included in inventories, in current assets, but because these cannot be converted into cash, you're not going to sell them and convert it into cash, they are excluded in calculating current ratio because they cannot be included in our ability to pay the current liabilities during the year. So option D is the correct answer. This is an important question. Okay, it will help you even in calculation of current ratio in important questions. Question number 9. Debt equity ratio of Dhamaka Limited is 3:1. Debt equity is 3:1. Which of the following will result in decrease in this ratio? What is the formula of debt to equity ratio? Debt upon equity, long-term debt upon equity. Okay, long-term debt upon equity. Now, when will this ratio decrease? Either when long-term debt decreases or when equity increases. Let's read and identify that. Issue of debentures for cash. So long-term debt will increase, it will not decrease. Issue of debentures to vendors. Issue of debentures means long-term debt will increase, it will not decrease. Goods purchased on credit. Goods purchased on credit will have no effect. Neither it will affect long-term debt nor it will affect equity. So it will have no effect. Okay. Issue of equity shares means equity will increase, and because of that debt to equity ratio will decrease. Okay. Question number 10. Sale of marketable securities will result in no flow of cash. Again, we have to identify which one is correct and wrong. This is sale of marketable securities will result in no flow of cash. Yes, correct. Why? Because marketable securities itself are current investments, and because they are current investments, they are a part of cash and cash equivalents. Being current investments, they are a part of cash and cash equivalents. So cash will increase, marketable securities means one cash and cash equivalent will increase, and marketable securities also a part of cash and cash equivalent. Another cash and cash equivalent will decrease. One will increase, other will decrease. There will be no change in cash and cash equivalent. So it will result in no flow of cash is true. Okay. Statement 2. Debentures issued as a collateral security will result in inflow of cash. No. False. If you issue the debentures as collateral security, then you are actually not issuing the debentures to anyone. Okay. You are borrowing a loan against which you are giving the debentures. So borrowing of loan is a separate transaction where the cash is going to increase. But for issue of debentures as a collateral security, neither cash is going to come in nor the cash is going to go out. So option C, statement 1 is correct, but statement 2 is incorrect. 11. What will be the effect of issue of bonus shares on cash flow statement? No effect. Just like issue of debentures as a collateral security. Okay. Issue of bonus shares means you give the shares free of cost to existing shareholders utilizing your own reserves and surplus. So cash neither comes in nor goes out. It has no effect on cash flow statement. Question number 12. Aditya Sunrise Limited provides you the following information. Okay. Particulars: bank loan of nil and 10 lakhs. Now this 31/3/23 is current year and 22 is last year. So basically from 1 lakh, if it has become nil, means it is repaid. We have done a repayment of bank loan that will result in financing activities, repayment of bank loan, financing activities outflow. It will result in financing activities outflow. Additional information: equity share capital raised during the year 3 lakhs, financing activities inflow will get the money. 10% bank loan was repaid on 1st April, beginning of the year. Means you have beginning of the year, if you have repaid the interest loan, interest will be calculated on this amount. End of the year. So zero interest because the amount is nil. 1st April itself you have repaid 1 lakh. So during the year you don't have any liability on which you have to pay interest. Okay. So interest is not there. Then dividend received during the year is always an investing activities inflow. Dividend received during the year is investing activities inflow, and we will also, like dividend received, we will take it in O minus. Operating activities will subtract it as non-operating income. Okay. In operating activities will subtract it as a non-operating income. Dividend proposed for the year 21/22 means last year. This is last year. was 50,000, and but only 20,000 was approved. Now whatever is approved by the shareholder will only be paid. Whatever is approved by the shareholders will only be paid. So 20,000, amount of 20,000 will take as financing activities outflow, and 50,000 will take it as proposed dividend. No, 20,000 itself will take it as even operating profit before tax and extraordinary items. In operating profits notes, we will add it. Finding operating profits before tax and extraordinary items, we will add it. Now, what is the main question asked to you? Find the cash flows from financing activities. Financing activities means find out only financing things. Which all affects financing things? One is this minus 1 lakh. Okay. Then this plus 3 lakhs. Then investing operating doesn't affect financing. This 20,000 we have to minus in financing. Now 3 lakh minus 1 lakh 20,000 will be 1 lakh 80,000. Overall, there will be a cash inflow of 1 lakh 80,000 due to financing. Okay. You can even read the final question first. If financing is asked, just identify the financing activities in exams, and in less period of time you can complete it. And also, if first 15 minutes of your exams you are devoting in reading the questions, then there itself you identify and mark these items. So while actually solving the questions, you don't waste time. Financial statements are prepared based on certain basic assumptions, prerequisites known as postulates. We always make financial statements based on the basic assumptions or postulates like going concern concept, then going concern concept, then accounting entity concept. Accounting entity concept is a postulate basic assumption. Then periodicity concept. Okay, there is also the assumption, and even accrual concept. Based on these 4 basic assumptions, we make financial statements. And what are these basic assumptions? Called as postulates. Okay. 14th question. Which one of the following is correct? Let's identify each of them and identify if they are correct or wrong. Quick ratio can be more than current ratio. Never. Quick ratio can never be more than current ratio. Current ratio includes all assets, and in quick ratio we exclude inventories and prepaid expense. So quick ratio is always going to be lower than current ratio. Okay. High inventory turnover ratio is good for the organization. Yes, obviously inventory turnover should be more, except when goods are bought in small lots or sold quantity quickly at low margins to realize cash. Correct. If you buy it in small lots, then you sell it frequently, so inventory turnover ratio would be more. That doesn't actually show that sales are higher. So except in this situation, high inventory turnover ratio is always good. Sum of operating and operating profit ratio is always 100. This is also true. This is also true. This is also true. This is false. First one is false. Okay. So second and third are true, means option C. Only 2 and 3 are correct. Okay. Going to question number 15. From the following, calculate interest coverage ratio. Net profit after tax is 12 lakh and 10% debentures is 1 crore. Tax rate is 40%. How to solve such questions? Profit before interest and tax minus interest will give us profit before tax, minus tax will give us profit after tax. We will have to go reverse. Okay, we will have to go reverse. Means, what is profit after tax given to you? 12 lakhs. What is tax rate given to you? 40%. Now you suppose that profit before tax is 100. Tax is 40. So what will be your amount of profit after tax? 100 minus 40, 60. Accordingly, what should be profit before tax if we go reverse? When after tax is 60, before tax is 100. So if after 12 tax is 12 lakhs, what will this amount be equal to? 12 lakhs into 100 divided by 60. 12 lakhs into 100 divided by 60. 0 cancels 6 into 2, 12. So 20 lakhs. Okay. Obviously 20 lakhs, 40% tax, 8 lakhs is paid. So profit after tax is 12 lakhs. So going reverse. And interest we get from this 1 crores 10% interest will be equal to 10 lakhs. Now again, if you go reverse, this minus will become plus. So 20 lakhs plus 10 lakhs. What would be profit before interest and tax? 30 lakhs. Now what is the formula of interest coverage ratio? Profit before interest and tax divided by interest. Profit before interest and tax divided by interest. 30 lakhs divided by 10 lakhs. 3 times. Profit before interest and tax divided by interest. 3 times means option B is your correct answer. Okay. Going further. Sixteenth question. Insurance claim received by Albert companies of 5 lakhs for loss of machinery due to theft. Now, if you have received insurance claim for loss of machinery due to theft, machinery basically comes in investing activities. So it will be taken as investing activities inflow. And because it is an extraordinary item of income, it is an extraordinary item of income. So operating activities in the working notes, we will add it. Means working notes, we will minus it. Incomes, we will minus. Expenses, we will add. So in the operating activities, working notes, we will minus it. Okay, being an income. Received means it's an income. So when we find this profit before tax and extraordinary items, in that we will subtract it and we'll take it in investing activities inflow because it is related to machinery. Had it been related to goods, then in operating activities we would take at the end as an inflow extraordinary item. But because it's of machinery, we'll take it in investing activities as an inflow. So which option will be the correct answer? Option D. One is will subtract it in operating activities as an extraordinary item, and second is we'll take it as an inflow under investing activities. Okay. 17th question. A company issued 20,000 9% debentures of 100 each at 10% discount. These debentures were redeemed at 15% premium at the end of 5 years. We have issued them at discount plus we are going to redeem them at 15% premium. The balance in security premium account as on the date of issue was 3,70,000. So we have studied in debentures chapter that security premium is the first priority for writing of the discount and premium on redemption. That is the loss on issue of debentures. How this transaction will be reflected in cash flow statement. Now let's understand how will this be reflected. How much is the loss on issue of debentures? How much is the discount on issue of debentures? 20,000 multiplied by 10% means 10 rupees. So 2 lakhs. Same way, how much is premium on redemption of debentures poured? 15% premium means 15 rupees. So 20,000 multiplied by 15 means it is 3 lakhs. Now, 3 lakhs plus 2 lakhs, 5 lakhs is what we have to write off. We have security premium of 3 lakh 70. So first priority we will use 3 lakh 70,000 from security premium account. Balance we will take from statement of P&L account 1 lakh 30,000. Now this amount which you take from statement of P&L account as the loss on issue of debentures written off is a non-cash expense. So it will be added in operating activities as a non-cash expense. Accordingly, which option will be correct? Option C. Will add 1,30,000 under operating activities as loss on issue of debentures written off and inflow of 18 lakhs under financing activities. Why? Because against 10 rupees discount we are going to collect 90. So 20,000 into 90, 18 lakhs. 20,000 into 90, 18 lakhs. The money which we actually receive from debentures will be taken as inflow under financing activity. So option C is the correct answer. Okay. Going further. Question number 18. From the following information, find out the inflow of cash by sale of office equipments. Sale of office equipment. So we'll have to make the ledger account of office equipments. You all can see here office equipments. 22 means closing and 21 means opening. Okay. And in additional information, we are given with the depreciation which comes on the credit side in the ledger account 40,000. Purchase of equipments 30,000 comes on the debit side. And profit on sale of equipment 12,000. Part of equipment is sold for 12,000. So that also comes on debit side. If you make the ledger account of office equipments, if you make a rough ledger account of office equipments, you'll find that this opening balance 3 lakhs will come on the debit side. Okay, opening balance 3 lakhs will come on the debit side. Closing balance 2 lakhs will come on the credit side. Depreciation of 40,000 will come on the credit side. Purchase of equipment of 30,000 will come on the debit side. And profit of 12,000 will also come on the debit side. You have to remember the shortcut here. PP, purchase and profit come on the debit side. Everything else comes on the credit side. Depreciation, sale, loss comes on the credit side. Even sale comes on the credit side. Balancing figure. From this, we'll get the sale of equipments, which is asked actually in the question. So let's find this balancing figure, sale of equipments. You all can see this total 3,30,42,000. From 3,42,000. From 3,42,000. If you minus 2,40,000. 2,40,000 if you minus it, 1,02,000 will remain. 3,42,000 minus 2,40,000. How much will remain? 1,02,000. In which option do you have 1,02,000? Option B. So 1,02,000 is the part of the equipment which would have been sold. Okay. Question number 19. If total sales is 2,50,000, credit sales is 25% of cash sales, not total sales. They have asked you the amount of credit sales. So let's make a simple equation. Cash sales, credit sales, total sales. Okay. Now let's compare it. They say credit sales is 25% of cash. So take cash sales as 100. Credit sales 25. 100 plus 25, total sales 125. Suppose you assume cash sales as 100. Credit sales is 25% of that 100's 25% will be 25 itself. 100 plus 25, total sales 125. They have asked you credit sales in the question. So if total sales is 2,50,000. Total sales is 2,50,000. They have asked you credit sales. What would be the credit sales? Had they asked you cash sales, then put question mark here. Now compare it. When total sales is 125, credit is 25. So 2,50,000 how much? 2,50,000 multiplied by 25 divided by 125. 2,50,000 multiplied by 25 divided by 125. 25 into 5. 5 into 5. 50,000. Means which is the correct option? Option A, 50,000. Okay. Cash sales, if they would have asked, then 2,50,000 into 100 upon 125. Any of the questions you can similarly solve it, right? Then question number 20. What will be the amount of gross profit of a firm if its average inventory is 80,000, inventory turnover ratio is 6 times, and selling price is 25% above cost? Let's do step by step. First, inventory turnover ratio is given to you as 6 times. Use that formula. Inventory turnover ratio equals to cost of goods sold or cost of revenue from operations upon average inventory. Now this is already given to you as 6 times. Average inventory is given 80,000. Cost of goods sold can be obtained from this. If you multiply it, what would be cost of goods sold equal to 6 into 80,000? 4,80,000. Now profit is 25% on cost. We got the cost as 4,80,000. So what will be 25% profit of that? 4,80,000 into 25 by 100. 1/4 of 4,80,000, 1,20,000. 25% means 1/4. So 4,80,000 into 25 by 100. 1/4 of 4,80,000, 1,20,000 would be your. Okay. Question 21. Which of the following statements are false? Let's read each of them and identify if they are true or false. A statement. When all comparative figures in a balance sheet are stated as percentage of the total, all figures you state as percentage of total is called vertical analysis. Okay. It is termed as horizontal analysis. Wrong. It is not horizontal. Which one it is? Vertical. So this statement is false, because in vertical manner you are stating the percentage. When financial statements of several years are analyzed, several years means year 2022, 23, 24. So they are horizontal analysis. Okay. Then it is termed as vertical analysis. Wrong. Several years means either you can say it is horizontal or you can say it is time series, because in the time series you compare 1 year with another year. So time series, when you compare only 2 years, it is horizontal. When you compare several years, it is time series. And time series is a type of horizontal analysis. Okay, it is a type of horizontal. Vertical analysis is also termed as time series analysis. Just now I answered it. Time series is a type of horizontal. So vertical analysis is not time series. Horizontal analysis is termed as time series analysis, not vertical. Okay, here also option horizontal. So all are wrong. D option. Which one is false? All the three are wrong. Okay. Question number 22. Given below are two statements, one labeled as assertion and reasoning. I told you earlier also, assertion and reasoning, just both of them you read it and identify individually first they are correct or not. Then identify the reason is correct reason of A or not. Assertion: increase in the value of closing inventory increases profit. Yes, because closing inventory will increase means cost of goods sold is equal to opening stock plus purchase minus closing stock. So cost of goods sold will decrease, cost will decrease, profit will increase. Yes, it's true. Okay. Why? Because cost will decrease, so profit will increase. Then second, increasing the value of closing inventory reduce the cost of goods sold. This is what I told you here. So this is also true. And it is the correct reason. This is actually the reason why the profit is increasing. So both are correct. A and B, A and R. And it is the correct explanation or reasoning of. Given below are two statements again, assertion and reasoning. Assertion, high operating ratio indicates favorable position, no, wrong. Operating ratio is the operating cost ratio. High operating cost ratio is a unfavorable position. Which is the favorable position? Operating profit ratio if it was given. Then profit ratio high is a favorable position. This is wrong. Operating ratio is a unfavorable position. Okay. Reasoning, high operating ratio leaves a high margin to meet non-operating expenses. This is also wrong. High operating profit ratio. Okay, not this. So both are wrong. Which ratio will leave more margin for non-operating expenses? Higher operating profit ratio, not operating ratio. Both the places the answer should be profit, not operating. So both are wrong means option C, both A and R are incorrect. Question 24. Current ratio of a company is 2.5:1. Accountant wants to maintain 2:1. Now, it wants to decrease it. Okay, basically it wants to decrease the current ratio from 2.5 to 2. Following options are available. What can be done by him? He can repay the bills payable. Now, what will happen if you repay the bills payable? Understand it? If you repay the bills payable, then current liability will decrease and asset side current assets will also decrease. Now, if current asset and current liability both will decrease because you are repaying the bills payable, so cash is going out. Current asset will decrease, current liability will decrease, means overall the ratio will increase. If the formula is current asset upon current liability, if both increase, then current ratio will increase. If both decrease, then current ratio will again, here both are decreasing, so current ratio will wants to decrease it. If both are decreasing, current ratio will increase. Why? Understand it with the figures. Suppose current ratio is 10 upon 5, 2:1. Okay. Now, if you are repaying the bills payable by 2 rupees, then 10 minus 2, 8, 5 minus 2, 3. Now, 8 divided by 3 is more than 2:1. More than 2:1 means current ratio will increase if both will decrease. And if both will decrease, then current ratio increase, then current ratio will decrease. It's inverse. If current asset and current liability both increase, current ratio will decrease. If current asset and current liability both decrease, current ratio will increase. Here both decrease, so current ratio will increase. But you are asked in which option the current ratio is going to decrease. Okay, so this is not the correct option. If you purchase goods on credit, then current liability will increase, and asset side, because you purchase goods on credit, inventory current asset will increase. Both will increase, so current ratio will decrease. Inverse relation. And if you take short-term loan, then current liability will increase, short-term borrowings, and asset side cash will increase, current asset will increase. Again, both will increase means current ratio will decrease. So which will be the correct option? 2 and 3. 2 and 3 means D option. Only 2 and 3 are correct. Okay. Then 25. A company has operating cycle of 8 months. Operating cycle of 8 months. Okay. Now, it has accounts receivable amounting to, accounts receivable means debtors and bills receivable 1 lakh. Out of which 60,000 have maturity period of 11 months. How would this information be presented in the balance sheet? Now, what is the concept of operating cycle and how do we show the thing in current asset or current liability? We consider whichever item is within operating cycle or 12 months, whichever is higher. Whichever is higher. In that period, if it falls, it is a current asset or current liability. Because here it is 8 months. And if you compare it with 12 months, which one is higher? 12 months is higher. So any asset which remains in the business for 12 months is current asset, and any liability which we have to pay in 12 months is a current liability. You have to take the higher one. Had the operating cycle been given to you as 14 months, then anything within the period of 14 months would be considered as current asset or current liability. Here 12 months is higher. So any asset remaining for 12 months, any liability payable in 12 months will be considered as current asset and current liability. Now let's read the options. 40,000 as current asset. 40,000 means they are talking about 1 lakh minus 60. Actually, entire accounts receivable is current asset because the period is 8 months, and entire 1 lakh is current liability. Because even if 60,000 has a maturity of 11 months and remaining 40,000 has a maturity of 12 months, entire 1 lakh will be your current liability. So operating cycle is 8 months, means 11 months, so remaining has 8 months. So both fall within 12 months criteria. Which option do you see that 1 lakh is current asset as well as current liability? This one is wrong. Here also 60 and 40 is wrong. 1 lakh is non-current asset, wrong. 1 lakh is current asset, is correct. Okay. Now 26th question. Balance sheet extract. Debentures are there. 19 means last year 2 lakhs, 20 means current year 1 lakh, 60 here. This is last year and this is current year. So what is the final question? Let us first understand. Asked to you financing activity. Okay. Let's focus only on financing activity things. Over here, 2 lakh decreasing to 1 lakh 60 means financing outflow of 40,000 in the current year. Interest on debentures is paid on half yearly basis on 30th September and 31st March. Debentures were redeemed on 30th September. So on 2 lakhs you'll pay for 6 months. After that you repay 40, and remaining 6 months you'll pay on 1 lakh 60,000. So 2 lakhs into 12% interest for 6 months would be equal to 2,000 into 6, 12,000. And on 1 lakh 60 we will pay again for 6 months, because September you repay 40,000. So after that you have to bear interest burden on only remaining 1 lakh 60,000. Further, if you count it for 6 months, then 9,600, 1,600 into 6, 9,600. So 21,600 would be again financing activities outflow, which is of our concern. Financing activities asked. 21,600 would be financing activities outflow. Then next. Okay, no other information is there. So 40,000 and 21,600. Okay, 40,000 and 21,600. 61,600 is the total cash outflow of financing activities. 61,600. 27th question. Which of the following is not a part of finance cost in statement of P&L? Bank charges, we take it in other expenses. We don't include it in finance cost. Interest paid on debentures, we include in finance cost. Interest paid on public deposits, we include in finance cost. And even loss on issue of debentures, we include in finance cost. Okay, loss on issue of debentures is a part of finance cost. Preliminary expense, underwriting commission, all these things written off are a part of finance cost. So option A is the correct answer. Bank charges we don't include in finance cost, but we include it in other expenses. Which of the following is not an investing activities cash flow? Purchase of marketable securities, yes, because marketable securities are part of cash equivalents itself. So they are not a part of investing activity. Option A is the correct answer. Land is a part of investing activity. Shares which are held as investment is a part of investing activity. Equipment is also a part of investing activity. Okay. Option A. Marketable securities are a part of cash and cash equivalent itself. They are not part of investing activities. 29. Dash may indicate that the firm is experiencing stockouts and lost sales. Inventory turnover ratio. Okay, inventory turnover ratio, if it is high, that means if it is inventory ratio is high, that means sales are more, not lost sales. If it is low, that means either sales are less or you are out of inventories. So inventory turnover ratio shows the stockouts and lost sales if sales have decreased. 30. Question number 30. So we'll try to finish with the part B, all the type of MCQs which are possible today itself. Okay. Maybe we extend little bit beyond 1 hour, but we finish all the MCQs which are possible in part B. Current ratio of Vidur Private Limited is 3:2. Current ratio is given 3:2. Accountant wants to maintain 2:1. Now 3:2, 3 divided by 2 is 1.5:1. And he wants to maintain 2:1 means actually he wants to increase the ratio. From 1.5 you want to increase it to 2:1. Following options are available. Now just now I told you, when will current ratio increase? When current asset and current liabilities both decrease. When current asset and current liability both decrease. Let's find out. He can repay bills payable. If you repay bills payable, current asset will decrease because cash will go out. Current liability will decrease because bills payable are repaid. So yes. You purchase goods on credit, inventory will increase, current asset will increase, creditors will increase, current liability will increase. So no. Okay. If we have to increase current ratio, current asset, current liability both must decrease. If you take short-term loan, cash will increase, current asset will increase, loan short-term borrowings will increase, current liabilities will increase. No. So only this option, both current asset and current liability will decrease and overall the current ratio will increase. Only option A is correct. Question number 31. Now, these were the questions we practiced from past years. The first 30 questions which we have solved, all those have been asked in past years board exams and past years sample papers. Now we take up with the questions which were asked in the recent most 2025 board exams. Okay. As I said to you, 4 questions only are a part of your exams. So 31 to 34, 4 questions we take up which had been asked in recent most board exams. Let's see what kind of questions come in board exams. From the following, identify the incorrect statement related to analysis of financial statements. Let's read them. Financial statement analysis is used only by the creditors. No, this is, yes, incorrect. Okay. Financial statement analysis is used by bankers, shareholders, debenture holders, bank, government, debtors, employees, not only by the creditors. Okay. Financial statement analysis does not take price level changes into consideration. Yes, it does not take price level changes into consideration because we take all the assets in financial statements at costless depreciation. So it does not take inflation into consideration. Financial statement analysis ignores non-monetary aspects. Yes, death of chairman, efficient employee, workers. These are the non-monetary aspects which are important but not taken into consideration in financial statements. Financial statement analysis helps to identify the reasons for change in profitability and financial position. Yes, P&L statement shows the reasons why profitability is changing and balance sheet shows why financial position are changing. These 3 are correct. Which one is incorrect? Only option A is incorrect. In option, one more question was asked last year. Choose the correct equation with respect to capital employed. Now, what is capital employed equal to? From the liabilities side, shareholders funds plus reserves and surplus is equal to capital employed, or from the asset side, non-current assets plus current assets minus current liabilities is equal to capital employed. Total assets minus current liabilities. Let's see which option is correct. Shareholders funds minus non-current liabilities, wrong, plus, okay, non-current assets plus net working capital, yes, because what is net working capital? Current asset minus current liability. So it becomes non-current assets plus current asset minus current liability. This formula I gave you over here. Let's rule out the other ones also. Non-current assets minus net working capital, no, we have to add it. And share capital plus reserves and surplus, yes, but current liabilities, no, they are not a part of capital employed. So option B is the correct answer for capital employed. Okay. Question number 32. Dash will decrease the debt equity ratio and will not change the current ratio. Okay. Let's read one by one all of them. Issue of equity shares for cash. Now issue of equity shares means debt upon equity. Equity will increase, so debt equity ratio will decrease. We are asked which one will decrease the debt equity ratio, yes. And if you issue equity shares for cash, then current asset upon current liability, current asset will increase, so current ratio will also increase. But you are asked not change the current ratio, no. It will have the impact. This one will take place, but no change in current ratio will not take place. And exactly same for issue of preference shares for cash. So this is also wrong. Redemption of debentures means debt will decrease. So debt equity ratio will decrease. Yes. And cash will go out. So current ratio will also decrease. So again, this no change does not get satisfied over here. Issue of shares for purchase of land and building means only equity will increase. And because you are buying land and building, it will have no effect on current assets and current liabilities. So current ratio is not going to change. Option D is the correct answer. Okay. Debt equity ratio will decrease because equity will increase, but current ratio will not be affected. Statement 1. Purchase of goodwill is classified as investing activity in all types of enterprises. Yes, true. Whether financial or non-financial enterprise, buying of goodwill is always considered as a part of investing activity. Payment of interest is classified as financing activity in all types of enterprise. Yes, I discussed this in few previous questions also. Payment of interest and dividend is always taken as financing outflow, whether it is a financial or non-financial enterprise. So both the statements are correct. Means option A, both the statements 1 and 2 are correct, true. Question 34. 4 questions I told you were asked in board exams. Last one for the last year's board exam. Manish Limited had balance in provision for taxation account of 9 lakhs and 12 lakhs on 31st March 23 and 24. 23 means this is the opening balance. 24 means this is the closing balance. Provision for tax made during the year 6 lakhs. Amount of tax paid. Just make provision for tax account to find it. How will you make provision for tax account? Opening 9 lakhs on the debit side. No, sorry, credit side. Opening in provision for tax comes on the credit side. Closing 12 lakhs on the debit side. And provision for tax made 6 lakhs also on the credit side. Now, whatever remains on the debit side, is tax paid. So, 9 plus 6, 15 lakhs. 15 lakhs minus 12 lakhs. How much remains? 3 lakhs. This is the tax paid. Okay, if you make the provision for tax ledger account, you can very easily get it. What is the tax paid amount? Option D, 3 lakhs. Then optional question, what is asked? Going for the optional one, no need to waste time for the calculation of ledger account. In exams, if you get such an option, go for the optional, which is theoretical one. In MCQ, always go for the theoretical ones. Acquisition of machinery by issue of equity shares of 30 lakhs will have no effect on cash flow statement. If you are acquiring machinery and giving equity shares, neither cash comes in nor cash goes out. So it will result in no flow of cash. See, in just few seconds, you can answer it. So in exams, sometimes selecting the right question to answer also makes difference. That's why I've been telling again and again that first 15 minutes of reading time entirely give on MCQs only, so that you save the time in deciding which option you must go in for, and you also read the questions properly. Now this is current year's sample paper on the CBSE website. We discussed the answers of that. A company had following, so here again last 4 questions left out to be done for today, and part B MCQs all covered in this single session only. A company had following balances in their books of accounts: raw material, work in progress, finished goods, stock in trade. This is closing, this is opening. 25 is closing and 24 is opening. Now it is asked to you, determine the amount of change in inventories to be shown in the statement of P&L account. Now change in inventories includes what? Opening minus closing. Change in inventories is nothing but opening minus closing stock. But opening minus closing stock of what? Only work in progress, finished goods and stock in trade. Because raw material is a part of change in cost of material consumed. It is not a part of change in inventory. So this is not to be included. Work in progress, finished goods and stock in trade is a part of change in inventories. Let us find out opening minus closing. What is the total amount of opening, work in progress, finished goods and stock in trade? 1 lakh, 2 lakh, 3 lakh, 3 lakh 60,000 minus, okay, this amount. What is closing stock of work in progress, finished goods and change in and stock in trade? 2 lakhs, 3 lakh, 3 lakh 70,000, this amount. 3 lakh 60 minus 3 lakh 70 minus 10,000 means option C is the correct answer. Important point to be noted, just don't add all of them. In change in inventories, we don't include raw material because it is a part of cost of material consumed, not a part of change in inventories. Okay. 36th. Inventory turnover ratio of a company is 5 times. We have to use that formula. Revenue from operation 5 lakhs, gross profit 25%. So 5 lakhs minus 25%, 1/4 of 5 lakhs is 1,25,000. So 3,75,000 is cost of goods sold. Cost of revenue from operations, no, it is 25% of cost of revenue. We'll have to make the workings. Determine the amount of opening inventory if closing is 60. First of all, let us find cost of revenue from operations. Suppose cost of revenue from operations is 100. Now 25% of cost is our gross profit. So sales or revenue from operations would be equal to 125. Now when revenue from operations is 5 lakhs, what would be the cost of revenue from operations? 5 lakhs into 100 divided by 125. 5 lakhs into 100 divided by 125. 25 into 4, 25 into 5, 5 into 1 lakh. So 1 lakh into 4, 4 lakhs. What is cost of revenue from operations? 4 lakhs. Okay. Cost of revenue from operations is 4 lakhs. And you can cross check. 4 lakhs, 25% profit, 1 lakh. So revenue comes to 4 lakh plus 1 lakh, 5 lakhs. Now let us use this inventory turnover ratios formula. Inventory turnover ratio equals to cost of revenue from operations divided by average inventory. Okay. cost of revenue from operations divided by average inventory. So 5 times is equal to cost of revenue from operations, we got 4 lakhs, divide by average inventory. So we can find out average inventory from this. Okay, AI is average inventory, not artificial intelligence. So what will be average inventory equal to 4 lakhs divided by 5, 80,000. What will be average inventory equals to 4 lakhs divided by 5, 80,000. Now how do you find this average inventory? Opening plus closing inventory divided by 2. What did we get? Average 80,000. So 80,000 is equal to say closing inventory is given 60,000. So opening plus closing 60,000 divided by 2. 2 will get multiplied. What is 80,000 into 2? 1,60,000. Opening plus 60. 60 on the left will become minus. So what is opening inventory? 1,60,000 minus 60, 1 lakh. 1,60,000 minus 60,000, it is equal to 1 lakh. Okay. When this live session is available again in the app as recording, you all can rewind, re-see the same part again and again if you don't understand. Okay, that benefit you'll always have in the recorded lectures. So go through this entire flow, but pretty long question for 1 mark. So much to be solved just to score this 1 mark. However, what answer do you get for opening inventory? 1 lakh. Option C. Okay. So first, from this cost of revenue from operations, 25% profit, we first find the cost of revenue from operations. Then using inventory turnover ratio, we find average inventory. Then using average inventory, we find the opening inventory. Actually, it should have been for 4 marks. In your paper, further a question of 4 marks also comes. This type of question with so many calculations should come for 4 marks. However, from that point of view, also you can prepare this. Okay. Less chances of such a lengthy question coming for 1 mark. 37th question. Proposed dividend for the year 2025, current year 2024, last year was 2,50,000 and 2 lakhs. Now, current year's proposed dividend we don't take into consideration anyway. That is just a contingent liability. It comes as a footnote. Current year's proposed dividend is not taken into consideration. Last year's proposed dividend we pay in the current year, so that is taken into consideration. Shareholders finalized the dividend amounting to 1,80,000 for the year ended 2025. That's current year. We don't have to take into consideration. And in June, July 24, unclaimed dividend. Okay. Okay. This will be taken into consideration. Reason. This will be taken into consideration as the shareholders have finalized the dividend amounting to 1,80,000 during the year, means it is for the last year they have finalized. During this year, you'll always finalize the dividend for last year. In June, July 24, you cannot finalize the dividend for 25. Okay. So if the AGM is held in June, July 24, it is this 24's dividend of 2 lakhs which was approved as 1,80,000. So 1,80,000 will only be paid. And out of that, unclaimed has been left out 10,000. Choose the correct option from cash flow statement. Now 1,80,000 company is going to pay, so you will take it in ON plus 1,80,000 means in finding operating profits before tax and extraordinary items, actual dividend which we have to keep aside 1,80,000 we have to plus, and 1,80,000 minus 10, 1,80,000 minus 10, 1,70,000 is paid. That will be taken as financing activities outflow. Let's read the options. Proposed dividend will be added in net profit 2 lakhs. No, it is 1,80,000. Proposed dividend 2,50,000. No. Proposed dividend added in net profit after tax will be 1,80,000. Yes, this is correct. And outflow of dividend 190. No, it is 1,70,000. Proposed dividend added in net profit 1,80,000 and outflow of dividend 1,70,000. Option D is the correct option. Okay. Okay, understand it once again. Last year's proposed dividend 2 lakh rupees, but shareholders approved only 1,80,000. So company will have to make a provision of 1,80,000. Now whatever provision company makes 1,80,000, that we will add in profit before tax and extraordinary items. But because 10,000 remains unclaimed, that will come in current liabilities. And again in operating activities, it will have separate effect. But 1,70,000 after unclaimed, what is finally paid off will only be taken as outflow of financing activities. Okay. So this is a nice question. In option, what is asked? Provision for tax for the year ended 31st March 25, 24, 3 lakhs 280. So 25 is closing and 24 is opening. Okay. 25 3 lakhs is closing. 24 2 lakh 80 is opening. During the year, tax paid. Now opposite. Earlier, just now with the question what we solved, provision for tax was given. We found the tax paid. Now tax paid is given, and we have to find the proposed amount. Same will make provision for tax account. Let's make it. What is the opening amount? 2 lakh 80 will come on the credit side. What is the closing amount of this 3 lakh rupees? That will come on the debit side. Closing amount 3 lakhs. Tax paid 2 lakh 50 will also come on the debit side. Now whatever amount remains on the credit side, that much provision we have to make in the current year. So 2 lakh 50 plus 3 lakhs, 5 lakh 50. 5 lakh 50 minus 2 lakh 80 is 2 lakh 70,000. Means 2 lakh 70,000 of provision for tax will be made in the current year. So what will be your correct option? Option D. 2 lakh 70,000 will be provided in the current year. Okay. So such a question is quite easy to solve. You just make the ledger account in rough. Even no need to write opening, closing. You already know which things should come on credit and debit side. Just make a rough ledger account and calculate it very quickly. Okay. Now the last question for today's session. Which of the following is cash flow from operating activities for a finance company? This is important. Finance company point of view, we have to see what is cash flow from operating activity. Conversion of debentures into cash. No. Conversion of debentures into cash is always a financing activity for any company. Dividend received is financing because you are finance company. So being a finance company, your business is borrowing and investing the money. Your business is getting the money and using that money. You use that money in buying shares, debentures, and other investments. So whatever dividends and interest you receive, it is a part of your main business activity for a finance company. That is a part of operating activity. So this is correct. Building is always a part of investing activity for any company. Dividend paid is always a part of financing activity for any company. So dividend received for a finance company is an operating activity. So this sums up with all the MCQs. You all can see first 8 sessions again that will guide you for the MCQs from part A. 16 MCQs that will help you. And this session covers all the MCQs which can be asked in part B, that is volume 3. So wishing you all a very good luck for exams. Bye everyone. Take care.